To me, this is like the big money's going to read this. BlackRock's the biggest asset allocator in the world, and they're going to follow Larry Fink's advice, and they're going to buy 2%. 2% of 200 trillion is $4 trillion. We're not going to get there overnight, but I tell you, we are going to have hundreds of billions of dollars potentially next year, potentially in 2025. That's going to move the market up quite a bit. $200 billion should move the market up to 300,000, 400,000. Sky's the limit, really. But you have to look at it over a decade. This is going to be an amazing decade to own Bitcoin.
Krueger emphasizes that Bitcoin's current growth phase offers unparalleled opportunities. As adoption expands, the structural catalysts driving Bitcoin's price will diminish, leading to reduced volatility. This is why early adoption within the next decade is crucial for maximizing returns. Institutional investors are already taking note, with giants like BlackRock and MicroStrategy leading the charge. Krueger predicts a flood of capital entering the market, potentially pushing Bitcoin's value to unprecedented heights. He estimates that even a modest 2% allocation of global assets, totaling $200 trillion, could inject trillions of dollars into Bitcoin, driving its price well beyond $300,000 in the coming years.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
There are three adoptions drivers they see. First is that it allows you to transmit money across borders. They're not concerned about intercompany payments. They're just thinking across borders. The second is anybody can participate in it. And the third is it's decentralized, and they're focusing on just the ability, no ability from governments, and specifically to increase supply. That's the way BlackRock thinks of this asset. I can think of 10 other reasons why you should buy Bitcoin. The fact that your ex-wife can't grab it from you, the fact that the government can't grab it from you, the fact that you can potentially move with your Bitcoin really easily, lots of other reasons. But these are good. And then they make the point that Bitcoin is like the Mag 7. Now, that's Google, Amazon, Apple, Tesla, NVIDIA, Meta, and Microsoft. And they say the average market cap of those Mag 7 is 2.5 trillion, and Bitcoin's now sort of falling right in that range, 2 trillion. And they make the case that there are sort of similar risk characteristics to adding a 2% allocation of any one of those stocks or all 7 of those stocks to your portfolio. They say you should add Bitcoin. Now, I think it's really interesting for them to say, hey guys, this is now the Mag 7 plus Bitcoin. So this is like a new entrant. And then the question everybody's going to be having is, well, how did those Mag 7 do over the last decade? And this is how they did. Apple 10x, Microsoft 8x, Google and Microsoft only 5 and 6x, but NVIDIA 40x, Tesla 60x, and Meta was the dog of them, at 4x. This is responsible for most of the growth of the stock market, or the U.S. stock market, over the last decade. On average, these things have gone 19x. You kind of need to be long one of these things. And if it's Bitcoin is part of the new Mag 8, you've done just fine by being long NVIDIA. You don't have to be long Bitcoin, but you kind of need one of these kind of hot sauces in your portfolio. So this is the ultra conservative portfolio, but they're saying at least 2% of one of these things, or 2% of all these things. And I think they're sort of saying Bitcoin is really a new one, and it has one other characteristic, which is there's no correlation, right? So it's uncorrelated with any of these things. All of these Mag 7s are very correlated with each other. Bitcoin has no correlation, so they're sort of saying it belongs in everybody's portfolio. And then finally, they say, it could become less risky later. So you might want to put more later, but you're not going to get the bang for your buck that you have now. They specifically say that, once the adoption becomes widespread, you're no longer going to have a structural catalyst for further sizable price rise. So this is something where they see the opportunity is right now for the next 10 years. And, that's why I think a lot of people are going to look at this report and they're going to be like, yeah, I kind of got to get involved right now. I don't need to wait 5 years or 10 years to add Bitcoin to the portfolio. So to me, this is like the big money's going to read this. BlackRock's the biggest asset allocator in the world, and they're going to follow Larry Fink's advice, and they're going to buy 2%. 2% of 200 trillion is $4 trillion. We're not going to get there overnight, but I tell you, we are going to have hundreds of billions of dollars potentially next year, potentially in 2025. That's going to move the market up quite a bit. $200 billion should move the market up to 300,000, 400,000. Sky's the limit, really. But you have to look at it over a decade. This is going to be an amazing decade to own Bitcoin.
Krueger references projections of Bitcoin reaching $1 million by 2029. While acknowledging the speculative nature of such forecasts, he stresses that Bitcoin's long-term value proposition remains strong. Factors such as its finite supply, growing institutional interest, and increasing mainstream acceptance make this scenario plausible. Krueger also notes that Bitcoin's journey to $1 million won't be linear or without challenges. However, he believes that demand-driven growth, rather than cyclical patterns, will define Bitcoin's trajectory in the coming years.
Bitwise comes out and it says, here's the 4-year cycles, right? And it says that we're in this cycle now called the mainstream cycle. And we're, currently at 101.5 here. This suggests a very good year next year. The third year has always been the better one of the three, except last cycle wasn't that great. But there's sort of an expectation for really good 2025 and a bad 2026, right? And then they sort of pass the next cycle will be the gold cycle when we pass gold. And so they predict a $1 million price of Bitcoin in 2029, which I'm not going to argue with. But what I do want to argue with is this idea of that these things are automatically chopped into 4-year cycles, with every fourth year being terrible, right? So, I think that there is a case to be made that we may not have a disastrous 2026, and that's really the point of this thing. So let's go into this tweet that I just made, and I'm talking about the mining sales versus halving. So if we're looking right now, you have the ETFs and MicroStrategies together this year. They've accounted for, MicroStrategy has 400,000 Bitcoin, right? And the ETFs have added over 400,000 Bitcoin since the 600,000 that Grayscale had, right? So together between these two, we've added 800,000 Bitcoin. I'm just going to round it to 800,000 Bitcoin over 300 days. It's a little bit more than 2,000 Bitcoin a day. I'm just going to round it down to 2,000 for argument's sake. And so we've been buying 2,000 Bitcoin a day, right, on average this year. But the mining rewards have been only 450 Bitcoin a day. So it's really almost, it's almost 4x what it is right now. Now, what happens in the next mining cycle? Well, certainly this number we know is going to go down. It's going to go down to half, right? It's going to go down to 225. What about this number? Well, this number, I think, will totally stay the same, even at a higher price of Bitcoin, right? And it may, in fact, go up. So I think it's going to look more like this next Bitcoin cycle. So, people saying, well, there's going to be a massive shock. Well, not really. I mean, it'll be entirely demand driven. So I think you really can make the case that, mining no longer matters. It's just, especially with these big mainstream TradFi players coming in, it no longer matters, even in Bitcoin terms, okay? So now let's talk about a different hypothesis. Let's talk about the gold hypothesis. Now, when gold came out in 2004, the gold ETF, we didn't have a massive inflation. We didn't have a lot of massive need for gold. I was involved in gold. I owned gold from way back, from 1991. I owned gold. And I participated in this gold GLD ETF right when it came out. And I can tell you, it was a very different story. It wasn't a 4-year cyclical story. It just kept on going up. So we went from 400 bucks an ounce to 500 to 600 to 800 to 865. A little bit of a pause there for 2008, but not much. 2009, we rallied all the way back, and then up to almost 1,100, and then 1,400, and then 1,500. We peaked at 1,800 in 2012. Okay, so we've had this amazing, 7-year bull market in gold, right? 7-year bull market in gold. Now, are you getting where I'm going with this? That's what I think is going to happen here. So let's go back to the Bitwise thing. I'm thinking that we go from there all the way up to there in more or less of a straight bull market. Now, again, it's not going to, what I mean is probably we have closing higher. Now, does it mean we're 100% going to get there? No. Could we have a 50% down year? Yeah. But does it have to happen on 4-year cycles? No. Is it connected to the halving? No.
Fred Krueger's analysis paints a compelling picture of Bitcoin as a transformative asset class poised for explosive growth. Its decentralized nature, uncorrelated returns, and increasing adoption by institutional players make it a must-have in modern portfolios. Whether you're an individual investor or part of an institutional fund, the message is clear. The time to get involved is now. As we look ahead, Bitcoin's evolution will undoubtedly reshape financial markets and investment strategies. With projections of Bitcoin becoming a $1 million asset by 2029, the stakes have never been higher. The question is not whether to invest, but how much to allocate.
Please like and subscribe my channel.